Under surveillance this morning, the race to replace Fed Chair Jay Powell.
I'm not really sure what the Federal Reserve is looking at because thus far we've seen very little, if any, price pressures from the tariffs. We are getting the process underway. Obviously, it's going to be President Trump's decision, and we're not in a rush. There's a long list, and like I said, there's some great candidates.
So here's the latest this morning. The U.S. Treasury Secretary Scott Bessent looking to expand the list of candidates to replace Fed Chair Jay Powell. According to reports, Bessent recently met with former Fed officials Larry Lindsey, Jim Bullard and Kevin Warsh.
This is the start of a process. We know that there's 10, 11 names circulating when it comes to the Fed chair himself or herself. And these are the first 3 of these long interviews. What I would say is that the President Trump doesn't love process as much as I think as a Secretary Bessent, but I don't get the urgency anymore from this administration. And that is because the data is moving to seeing a Fed rate cut next week. So they have, I think, a little bit of breathing room to take their time and go about this in a methodological approach to actually have a process. I think one thing that potentially is going to come up in these interviews is how the new Fed chair could shape the Federal Reserve based on really a scathing essay in the Wall Street Journal, where Bessent basically compared what the Fed did to the COVID pandemic and a terrible virus that took control of the economy.
There seems to be a big difference in the way that Wall Street and the Treasury is talking about inflation and the way that some people might be experiencing right now. I think Paul Donovan over at UBS has done a fantastic job of really explaining this. On Wall Street, we take a massive basket of goods and services and spit out a number and say what it might mean or might not mean for the Federal Reserve. At home, there's a thing called frequency bias. It's what do you come across every single day? What goods or services do you use? And a fantastic example of that is, say, coffee. Everyone wakes up, most people, reaches for a cup of coffee, and they realise the price of that has been going up aggressively, up 20% over the last year. And that is going to set their view on what's happening with inflation. And they're going to have a very different perspective, real-life perspective of what is happening in their life compared to what we're talking about around this table.
Which is the reason why I think a lot of people are looking at consumer sentiment. We'll get another read today to understand exactly how that's filtering into the decision making. I personally don't buy blackberries when they're above $7. I think that that's outrageous, and I just put them back. And fruits and vegetables just went up significantly in the latest CPI report. But you aren't seeing a lot of the sales fall off a cliff except for Restoration Hardware. So there's this question going forward of what is going to be the trigger point to bring down prices, right, if consumers are not going to push back. And that's one of the questions that's really been underpinning this.
To talk about some of these issues, George Pollack of Signum joins us now for more. George, welcome to the programme. Let's start with the Federal Reserve and work our way through things from there. So the Federal Reserve audition continues. The interviews will continue to build over the next several months. George, what is less clear are the kind of characteristics that this administration are looking for, both the Treasury Secretary and the President. What do you think they want from an incoming Fed chair?
So with the incoming Fed chair, I think they want 2 things. I think they want a strong resume to show to the market to say we're taking this seriously. We're not appointing someone who the market won't follow, who the market won't respect. But at the same time, they're looking for someone who will embrace monetary policies that are more in favor of the president's policies and more in line. Well, maybe not explicitly being so, at least showing some kind of independence of thinking and independence of thought.
Well, wasn't that the number one question when Donald Trump, when he was the 45th president, ended up asking Jay Powell to decide whether or not he should get the chairmanship job?
Yeah, absolutely. That's a very fair point. But I think the difference is that was the first Trump administration where he still had people around him who were trying to curtail his instincts and trying to push him to do certain decisions that they favored. With this administration, with Susie Wiles as chief of staff, what we're seeing is they're basically following the president's lead and making sure they're embracing his ideas and embracing what he wants.
Given the fact that the Fed is already going to be cutting interest rates when they decide to pick a new Fed chair, how important is this person going to be in terms of rethinking the Fed and how they operate?
I think even with the Fed cutting rates, as you guys were discussing, it will still be important for the administration to have their imprint on the Fed itself through the Fed chair. As we saw with the nomination of the likes of Myron for the Kugler's remaining term, they want people who are disruptors. They want the people who have thought about Fed independence, who have thought about the structure of Fed, and really do intend to see some reform executed.
George, are we being played? I kept wondering that when we saw more names come out, and I felt like they're just going to name Chris Waller, and we're just sort of getting other names thrown at us like fodder, fish bait, for us to talk about to just sort of keep the pressure up on the Federal Reserve. Is that your takeaway?
I think my takeaway is to an extent we're getting played. I think they're seriously interviewing these people because they want to hear their thoughts, they want to see their views. But in the end, I think we're going to end up with someone like Christopher Waller or maybe one of the two Kevins.
What do you think is going to be sort of, they love that. We had a long discussion about whether they like being called the Kevins or not. I wonder if you do think, though, that whoever is going to be the next chair, and this is something that's making its way into markets a bit more, is going to be creative about the way they use their balance sheet, maybe not expand it, but be willing to work with Treasury, whether it's Operation Twist, whether it's whatever creative instrument you can imagine, to keep longer-term yields lower. Do you think that that is actually increasingly part of these discussions?
I don't think they would ever say that openly because I think that would disturb the market. But I think the understanding is the Fed chair they pick, they're not going to make, as they view it, the same mistake they made with Jerome Powell. They're going to choose someone who they feel will be with them, maybe not openly, maybe not campaigning with them, but at the very least backing their ideas and backing their policies.
George, I wanted to go further with something that we were talking about around the table just moments ago, and that's how maybe consumers are viewing the economy at the moment and how Wall Street, the Treasury and the administration is talking about it. George, the Biden administration rightly took a lot of criticism for gaslighting the public around the conditions in this economy, talking about how great Bidenomics was at a time when a lot of people were struggling to get by. George, is there a risk that we repeat that? Talking about an economy that's doing well when the labour market data says it's not, talking about prices coming round and inflation being well behaved at a time when a lot of people are experiencing higher food prices, higher nat gas prices. George, do they run that risk down in Washington, D.C.?
I absolutely think they're running that risk. I absolutely think they're following in the Biden administration's trend, be it for better or for worse. And the story about the not buying Blackberries was that once they go above $7. The interesting thing is, though, there was a recent poll this week that laid out 55% of Americans, as of today, are not letting tariffs decide their purchasing decisions. So that means while there is still around 37% who say it does, a majority of Americans are still not feeling the effect of the tariffs or maybe not allowing the tariffs to affect their purchasing decisions.